Ask almost anyone who owns America's debt, and you'll get the same answer. China. The idea feels logical. It feels threatening. It feels like the kind of secret that explains everything wrong with the modern economy. A foreign power quietly holding the financial leash of the world's largest economy, waiting for the right moment to pull it tight. But if that were true, something doesn't make sense. If China really owned America's debt, why hasn't it used that power? Why hasn't the United States collapsed under pressure? Why do interest rates move based on domestic politics instead of foreign threats? And why every time there is a financial crisis, does the US government somehow borrow even more money instead of less? The answer to who owns America's debt is not only different from what most people believe, it's far more uncomfortable. Because once you see the truth, the story stops being about foreign enemies and starts being about something much closer to home. To understand this, you have to forget the idea of debt as a credit card bill. The US national debt is not one loan. It's not owed to a single lender. It's not something that can be suddenly called due. The debt is made up of thousands of promises called Treasury securities, Treasury bills, Treasury notes, Treasury bonds. Each one is a contract. Someone lends money to the US government, and the government promises to pay interest and return the money at a specific date in the future. That's it. No secret clauses, no transfer of ownership of the country, just a promise backed by the ability to tax and borrow again. The United States has lived this way since its birth. Before it was even a country, it was a revolution financed by debt. The Revolutionary War was paid for with loans from wealthy Americans and European allies. When the war ended, the new nation was already buried in obligations. Many people believed this debt would destroy the country before it even began, but one man saw it differently. Alexander Hamilton understood something that most people at the time didn't. Debt, if managed correctly, could be a tool of power. If the government honored its obligations, investors would trust it. If investors trusted it, they would keep lending. And if they kept lending, the nation could grow. This idea worked. The United States didn't fear debt. It normalized it. Debt funded expansion, infrastructure, wars, and industry. Over time, US government bonds became one of the safest places in the world to store wealth. That reputation only grew stronger through crisis after crisis. World War I expanded the debt. The Great Depression expanded it further. World War II exploded it beyond anything seen before. By 1945, the United States owed more money than ever in its history. And yet, instead of collapsing, it emerged as the most powerful economy on Earth. That moment changed everything. After World War II, the global financial system needed an anchor. Europe was destroyed. Gold supplies were limited. Currencies were unstable. The solution was the US dollar, backed by the strength of the American economy. And with the dollar came US government debt. Treasury bonds became the foundation of global finance. Countries didn't buy US debt to control America. They bought it because there was nowhere else safer to put their money. US treasuries were liquid, reliable, and trusted. They could be sold instantly, they paid interest, and they were backed by institutions instead of rulers. This is how America's debt stopped being a national issue and became a global asset. China enters the story much later, and not in the way most people think. China did not decide to own America. It accumulated US debt as a side effect of trade. When Americans buy Chinese goods, dollars flow into China. China then has a problem. Holding large amounts of dollars strengthens its currency, which hurts exports. Spending those dollars too quickly can cause inflation. So China recycles them into US Treasury bonds. This isn't a weapon, it's a recycling system. At its peak, China held less than 9% of total US debt. Today, it holds even less. That means even if China sold every bond it owned, the US debt would still exist almost entirely unchanged. The idea that China owns America collapses the moment you look at the numbers. This is where the story turns inward. The largest holder of US government debt is not a foreign country. It is the US government itself, through the Federal Reserve. Federal Reserve owns trillions of dollars in Treasury securities. It buys them to manage interest rates and stabilize the financial system. But here's the part almost no one talks about. The Federal Reserve returns most of its profits back to the US Treasury. That means a large portion of the debt is effectively owed to itself. Another massive portion of the debt is owned by government trust funds, especially Social Security. When Americans pay payroll taxes, that money doesn't sit in a vault. It's invested in Treasury bonds. Government borrows from future retirees and promises to pay them back later. The debt is not foreign. It's generational. Then there are U.S. banks, pension funds, insurance companies, and individual investors. They rely on treasuries as the safest asset in the system. Banks use them as collateral. Pension funds depend on them to meet long-term promises. Insurance companies use them to balance risk. In other words, the U.S. financial system is built on U.S. debt. America does not owe the world nearly as much as it owes itself, and that creates a different kind of risk. Debt becomes dangerous, not when foreigners hold it, but when internal trust begins to crack. History shows this pattern again and again. Empires don't collapse because outsiders own their debt. They collapse when political systems can no longer manage it responsibly. Rome didn't fall because another empire owned its obligations. It fell because it debased its currency and lost confidence. Revolutionary France collapsed under war debt, not because of foreign control, but because its political system broke down. Modern financial collapses almost always start from inside. The United States hasn't reached that point. But the warning signs aren't external. They're internal. Debt ceiling standoffs, political brinkmanship, treating default threats as negotiation tools, confusing the public about how the system actually works. The real danger isn't China dumping U.S. bonds. If China sold its treasuries, it would hurt itself as much as the U.S. The real danger is Americans losing faith in the institutions that make the debt system function. Every empire follows the same pattern. Not invasion, not conquest, but distraction. Blame shifts outward while the real problems grow inward. History doesn't repeat itself exactly, but it rhymes. And right now, the rhyme is getting louder. So here's the truth. Stripped of fear and myth, China does not own America's debt. Americans do. U.S. debt is not a foreign chain. It is a domestic promise system. And the future of that system doesn't depend on foreign threats. It depends on whether the country can manage its own obligations without turning them into political weapons. The most dangerous myths are not the ones that scare us. They're the ones that distract us. Because while everyone argues about China, the real question goes unanswered. What happens when a country owes itself more than it can politically agree to manage? That question has ended empires before. The answers never come from abroad. If this story changed how you see the U.S. national debt, share it with someone who still believes the myth. And if you want more deep dive documentaries that break down financial power using history, cause and effect, and uncomfortable truths, subscribe, because the next story is even harder to look at.